Good morning, good afternoon, everyone. It's Ankit. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Today I just want to go over a few articles that I found when I was just doing some search within the internet and Google. And I just wanted to go over these articles and their headlines and get your feedback in the comments below. Let me know what you think about these articles. Let's try to hit 3,000 subscribers in 3 months. With all that out of the way, let's get into these articles and see what they have to say. 66 members of Congress have violated a law designed to prevent insider trading and stop conflicts of interest. So if you scroll down in this article, you can see all the different people that were involved in this. So I'll leave the article in the description below so you guys can read it at your own time. So if you want to keep track of Capitol Hills and politicians, what they're trading, what they're buying, what they're selling, you can go to capitaltrades.com. Here's what the website will look like. On here, I'll show you the latest trades that were made by politicians, the biggest players of the politicians. Most traded by politicians right now is Nvidia, as you can see. When you click on trades, this is the page you get, and you can adjust all the different filters to find out whatever you want to find out. If you want to find out if they bought ETF, crypto, which party they're involved in, the market cap, transaction label. If you go to issuers, you can go here and see all the issuers, the company's name, latest trades, popularity, trades, politicians that own it, the industry, and here's all the different politicians. There's about 15 page. You can change it to 50. So you can see more within the same page, and you have to keep going through different pages. You can see the different states if you want to do that. So you should check this website out on your free time, and it could be a real great tool for you to find out what to buy, since a lot of people are insider trading. The first article that I found interesting was the stock market could surge 18% to new highs by year end as of 2022. Bear market is over. Do you believe the bear market is over? Let me know in the comments below if you think that the bear market is over and why. Or if you don't, why not? I think it's still a little bit too early to say that the bear market is done, because there's still a lot going on. There's unemployment still happening, layoffs still happening, the housing market issues still happening, supply and demand, low inventory, the Fed increasing rates is still happening. They're still planning on increasing rates. Then you have politicians doing insider trading, all the issues around crypto right now. People are trying to restrict crypto and all this other things. So there's still a lot going on for me to say we're out of the bear market yet, because there's still things that are happening, like layoffs. There's still things like low inventory in housing, and people having financial issues that cancels their current contract that they're looking for when they're buying a house. Big tech reign isn't over. These stocks look like a strong buy. The world's most important tech companies all reported their quarterly results this last week. In each case, the damage from the shown global economy was in stark evidence. Even with interest rates, higher fuel costs, the Russian assault on Ukraine, lingering supply chain issues, and the US dollar surging is infecting every tech business. Are we in a recession? Well, I did a video about are we in a recession or not, and my thoughts and opinions about it. It sure seems that we are, but it won't last forever. Keep that in mind. Nothing ever does. Some other issues are already fading away slowly. Fuel prices have been receding. The chip industry worries about the shortage have been replaced by fears of excess supply. So here's a graph of big tech's rebounding. Earnings seasons has offered new hope for most of the new tech giants. You have Amazon, Microsoft, Google, Apple, and Meta, all displayed on this graph right here. Michael Burry says that you shouldn't get too excited over a rosy corporate earnings, but he started seeing value in these 4 stocks. So let's see what 4 stocks he's talking about. So the first one is Meta. Of course, Facebook is undervalued right now, and I don't see social media going away anytime soon. Everyone's using it. Everyone wants to make a post. Everyone wants to get a kick of their dopamine. The next one is Alphabet, aka Google. I don't see Google going anywhere anytime soon, and they did a stock split, so they do have amazing services and things they're providing. For example, cloud services, G Suite, and a whole bunch of other ones. Another one that's a lot of people don't talk about is bookings.com, BKNG. Travel websites is now the second largest holding in his portfolio, as you can see. And it's currently trading with a free cash flow ratio of 18. That means the cash flow yield is as high as 5.6. And the last stock, which is Warren Buffett's biggest holding, Apple. So he also recently just bought a whole bunch of this tech stock in this quarter. And if you don't believe me, you can go check out 13F filings. So everyone's betting big on Apple. So, they still have a lot of things they're doing, but we don't know when the release date is for their glasses or new products and for their car. Apparently they're working on a car, but no one knows when it's going to come out. Vow to crush inflation with higher rates. Then the stock market rallied, and here's why. It's not good news though. So why did the stock rally? Why did the stock market rally? Well, here's why. The Fed reached their estimate of neutral rates. Why can't it all be good news and why something might happen? Every time the Fed becomes restrictive, they break something. So here's a chart showing every time they become more restrictive, how it broke something and what it broke. Here's the volatility adjusted market dashboard, the VAMD. It has the rates under purple, equities under yellow, credits under blue, FX under green.